A very warm welcome to you as you join us on today's episode of Tax Matters. We'll begin by congratulating all Nigerians. And to celebrate Nigeria at 59, we are celebrating our youths. As the saying goes, youths are the leaders of tomorrow, and that tomorrow is now. Today's episode of Tax Matters is dedicated to the youths of Nigeria. It is the story of the 5th edition of the National Tax Debates, organized by the Tax Club, University of Lagos, from Thursday the 19th to Friday the 20th of September 2019. This is a yearly event that brings students from various universities across Nigeria to discuss challenging issues facing the country and to proffer solutions to them. The debate took the form of the presidential debate with 4 finalists who emerged from the preliminary, slugging it out at the finale, which took place on Friday the 20th of September 2019. Topic of the debates: a blueprint for the taxation of the digital economy.
A typical Saturday afternoon in my house. We see I and my siblings with our phones, surfing the internet, trying to get ourselves updated with what is happening in the world. And trust my mother now, the typical Nigerian mother, to come and interrupt us shouting. Every time you're always on your phone, Facebook, Snapchat, people will not read your book all the time. But unknown to her, what we held in our hands, what you're holding in your hands and in your bags at this very moment is the key to the global market. We sell, we buy, we close deals, we render services, we complete transactions, all without leaving a spot or meeting people physically. This is the digital economy, the new economy, the economy of the future. Now, taxation of the digital economy, as we would all agree, is a gold mine for the generation of revenue for the government. I am Pamela Ojego, a member of Team G, and I'm here to explain to you the master plan, the blueprint for the taxation of the digital economy. The digital economy is the most innovative and wildest reaching economy in the world. In 2018, the Nigerian Investment Promotion Commission estimates that the Nigerian digital economy would generate $88 billion in revenue and create 3 million new jobs. However, Nigeria may be unable to tax this economy due to its laws, which are suited for traditional brick and mortar businesses, unless it amends its laws to adapt to the changing technological advancements. This blueprint is what I tag the UAA agenda, the Unification, Amendment, and Authorization agenda. Now on unification. The digital economy is a trans-jurisdictional and cross-border economy. Most companies and businesses that operate in this economy are multi-residents. Thus, to aid effective taxation of this economy, it is important that we have a unified tax law. Nigeria, being a member of the United Nations, can propose a bill on the floor of the General Assembly for the adoption of a unified tax law system for the taxation of the digital economy. Subsequently, after this bill has been signed into treaties, member nations can domesticate these treaties. The essence of this unified tax law is to prevent a case of double taxation. This proposition can also be done in the regional level under the Economic Community of West African States and the continental level under the African Union, where we now gradually work our way to the world stage under the United Nations. Now on amendments. In order for us to grow and move to the future, it is important that we are not shackled by the baggages of the past. Thus, we have to do away with aspects of our laws that are archaic and holding us back. Now, Section 13 of the Companies Income Tax Act, by implication, requires non-resident companies to have a fixed base or permanent establishment. This provision is a limiting factor, preventing the Companies Income Tax Act from effectively capturing the full scope of the modern economy. Now, it is the proposal of my government that this aspect of our laws be amended. And then we substitute the phrase fixed base for significant economic presence. As some companies, such as eBay, need not have a fixed base in Nigeria to derive income from Nigerian sources. This significant economic presence test has also been adopted in various jurisdictions, such as India and Israel. Now on authorization. there has been a staggering growth in online businesses, both in Nigeria and the world at large, through the use of social media platforms and the internet generally. We all know about Jumia, Konga, Gigi, Instablog Naija. Now, these businesses thrive electronically, making it difficult to ensure that value-added tax are paid on these goods and services which they supply, as customers just pay the exact prices as they see on their website or on these pages. Thus, it is the proposal of my government that banks be used as agents for the collection of these taxes. Because in every transaction that goes on in the digital economy, banks are the middlemen and are in a better position to collect these taxes. Now, I would like to commend the Federal Inland Revenue Service on their recent initiative to use banks as agents for collection of value-added taxes. However, this initiative has been faced with various criticism that will lead to a plethora of lawsuits against the bank. In order for us to avoid this ugly situation, my team and I proposes that there exists a multilateral agreement between the banks, the customers, the Federal Inland Revenue Service, and the CBN. And this can be done through the amendment of the BOFIA, the Banks and Other Financial Institutions Act. In addition to this, there will be a software system in place to aid banks determine which goods or services are subject to VAT. Furthermore, on authorization, we will work hand in hand with the custom and excise authorities to make sure that goods that come into Nigeria through the seaport and the airport are properly vetted, so that we would make sure that value-added taxes have been paid on these goods before collection. It would be foolhardy on my part to fail to recognize the fact that tax evasion and tax avoidance are major culprits and stumbling blocks to the growth of taxation in Nigeria. Thus, to avoid this tax evasion and tax avoidance from crippling our economy, it is the proposal of my government that heavy fines be issued on defaulters, and we should also blacklist online businesses, using our population as a bargaining chip to ensure compliance. Before us lies a great opportunity. And with this, my blueprint, I am confident that the Nigerian economy will experience a massive inflow of revenue that will shake the world at large. Thank you.
Wow, so much adroitness. It is really getting hot, and you can imagine who among the 4 finalists has the key to taxing the digital economy. As is consistent with the model, the other debaters took turns to ask questions, to which the speaker responded. Now to the next speaker, the representative of Team E.
In 1990, a young man by the name of Tim Berners-Lee invented what is known as the World Wide Web, or what you and I refer to as the Internet. In that same year, the Nigerian National Assembly passed into law the Companies Income Tax Act. Now, whilst the Internet has developed into a hub for commercial activities and so much more, the same cannot be said about the evolution of Nigeria's tax laws. And it is our opinion that a tax system that does not evolve with the times can be likened to stagnant water. It will become stale, foul-smelling, and deserves to be thrown out. Ladies and gentlemen, my name is Ifinoluwa Adeadimloa, and aside from being your presidential aspirant from Team E, I will be your chief architect in today's design class, where I'll be showing you a foolproof and efficient blueprint for taxation of the digital system. Now, the digital economy encompasses all economic activity that is significantly reliant on information and communication technology. It includes e-commerce, the sale of digital services and products, social networks, and intermediation platforms. Now, according to Tom Goodwin, the emergence of a digital economy means that something big is going on. But while something big is going on the outside, something bigger must be going on in the mind of our tax authorities. Because the FRS has reported that by 2021, the Nigerian digital economy will be worth $88 billion. However, there is no corresponding report of how they intend to potentially tax that $88 billion. This is why we've realized that the task of taxation is quite taxing. But the task of taxing the digital economy is even more taxing than that, which is why our blueprint we present to you is known as Eureka. Eureka is a term associated with the Greek inventor Archimedes to celebrate a discovery or invention. And what we have designed is something truly beautiful. Because in March 2019, the OECD reported that a bulk of businesses have said they have no problem paying tax. What they want is simplicity, certainty, and the avoidance of costly disputes. And this is what our proposal represents. So we have 4 points. To the first point, We propose source-based taxation because we believe that taxation should be done in the jurisdiction where value is created. And because users are what creates value for these data companies, tax should take place in the user's jurisdiction. This would be by reform of Section 13 of the Companies Income Tax Act, Cap C21 of the Laws of Federation of Nigeria, to erase the permanent establishment rule, which requires that a company be physically perform activities in Nigeria for the purpose of taxation. What we propose is the use of significant economic presence, which means that a threshold should be created, depending on the amount of users that are reliant on these digital services, as well as the amount of revenue they are deriving from Nigeria, to state that this is enough to create a nexus for the purpose of taxation. This would also apply even to Section 10 of the Personal Income Tax Act on the 183-day rule for individuals. Secondly, we also propose that there should be a use of withholding tax, and this is very important. Because you see, when you go on those various web pages and you see those little ads pop up of Jumia and of Konga, it is because Jumia has paid companies such as Google for these advertising services, meaning that Google is deriving income from a resident company in Nigeria. However, our tax authorities do not even get a dime of this. And even when they have attempted to, they've realized that they've not been able to establish tax liability for Google. However, the erasure of permanent establishments will not just solve this, but will make sure that the Nigerian entity will have a duty to withhold tax on the payment for those online services that are given to non-resident companies. Thirdly, which I've noticed has not been addressed by a lot of my fellow aspirants, is the pertinent issue of base erosion and profit shifting. Simply put, for those who are not familiar with tax in the room, what you'd find is that a lot of companies will set up a one-floor office in a beautiful tower in Ikoyi with only 20 employees, and on paper they won't seem so profitable. And this is because they are diverting profits to their parent company sitting in a beautiful tax haven such as Luxembourg. But if you take the example of the United Kingdom, you find that you can create anti-avoidance provisions which tax at a higher rate as your regular income tax laws. Evidence can be seen at the fact that Amazon, the largest data company in the world, has been forced to comply with the United Kingdom tax law because of the fear of being taxed under the United Kingdom Diverted Profits Tax Act, which they would have fallen under if they had continued through their contrived arrangement through their Luxembourg office. And lastly, the most familiar part of digital economy for most of us, e-commerce. Now, we recognize the decision of the court in Vodacom versus FIRS to the implication that imported services of non-resident companies are subject to VAT, and which proposes an adoption of the destination principle over origin. However, the rule of interpretation of tax statutes is that tax statutes be interpreted in favor of the taxpayer. So, for us to proceed in line with this, we must reform Section 10 of the VAT Act to show this. And this is even of increased importance in the emerging cashless economy which the CBN is trying to create. More so, if ever a time comes when cryptocurrency is actually recognized, it's important that we can pay VAT for all payments on online transactions. Now, it would be bereft of me to present you a blueprint without showing you how to administer it. Now, in May 2019, Ernst & Young has reported that the future of tax administration is digitalization, meaning we are fighting the digital economy with the digital economy. What you'd find is that in countries such as Spain, they've been able to command entities such as Airbnb to give them data on hosts on their websites, as well as those making money on the service platforms, because nobody owns the internet, people only use it as a platform. So if we have this data, and we're able to probably analyze it in this emerging era of data analytics, machine learning, and data intelligence, in line with Article 4.4 of our national tax policy, which promotes the use of technology and tax intelligence, we'll be able to follow in real time online transactions, taxpayers, as well as compare data across jurisdictions in country-by-country reporting, especially in the issue of transfer pricing, which I'm sure our judges are familiar with. As your presidential aspirant, aside from showing you a blueprint, which should give you green print, meaning revenue for our government, and showing you how to administer this blueprint, what I promise is that in this emerging era of digitalization, we would stand ahead of every other country, Africa, globally, and even in the hearts of our people. Thank you.
Fireworks! 2 gone, 2 to go. Before the debate began, the Dean of the Law Faculty, University of Lagos, Professor Ayodele Asienowa, spoke about the importance of students in the university system.
One thing we know in the University of Lagos is that without the students, we do not exist. As the Vice Chancellor will constantly remind us at the University Senate, If there is any one of us who does not like students, the person has to transfer their service to a research institute. What makes a university is the students. And we're ever so proud of our students, and in Faculty of Law even more so. We're so proud of our students that we actually allow them to fly. We have consistently supported our student initiatives. We have allowed their dreams and their ideas to be, and the Tax Club is one of such initiatives, established solely by students themselves in 2005. It has transcended an activity within Faculty of Law. It has become open to non-law students, and their activities have become open to non-law students, not only within University of Lagos, but students from other universities, and of this we're very proud. We have come to the 5th edition of the National Tax Debate, one of the activities that our students have been able to put forward and which has become their flagship activity. All I can say to you today is that you sit back, you enjoy the intellectual expositions that those who have researched over months and those who have developed their oratorial skills are going to put on display.
The president of the Tax Club gave the raison d'etre for the choice of theme for the 5th National Tax Debate. Keynote speaker at the 5th National Tax Debate was Mr. Afolabi Elebeju, a commercial lawyer and a multidisciplinary business consultant.
The basis of my conversation today is that you cannot have a great nation without taxes. Essentially, tax involves a bit of pain, but this is something that we have to deal with. So I would say having an optimal, workable tax system is one of the characteristics of successful, developing, emerging nations. And for countries that are ambitious, especially Nigeria, for example, we do not have a choice. Here we are, with a mono economy that is very susceptible to price shocks. The major product we sell is crude oil and petroleum products. And then there's a need to move away from being a mono economy to a diversified economy. There's a need to move away from being a resource-based economy to a production or productive economy. There is a need to find a way to improve our low tax to GDP ratio. There's a need to find a way to bridge our huge infrastructure gap, our huge debt service burden.
Mr. Elebeju's presentation will form a large chunk of a subsequent episode of Tax Matters, as we consider his presentation worth sharing with our viewers.
London, New York or Lagos, business or holiday, home or office, you can now carry out your tax transactions from anywhere in the world. You can now file all your tax returns, pay online, get a receipt and even process your tax clearance certificate from anywhere in the world online and in real time. All you need to do is log on to www.firs.gov.ng and click on e-services and be introduced to the world of innovation, convenience and transparency from the FIRS. You can also pay stamp duty as you register a new company with the CAC or for other transactions that require stamp duty payment online. You can also file your withholding tax returns and determine the withholding tax deducted from you is in government coffers so that you can get your receipt within 45 days as long as the deduction has been remitted. Yes, all of this and more online at www.firs.gov.ng/e-services. FIRS, making tax administration as easy as ABC. Please note that all FIRS services are free of charge. This message is from the Federal Inland Revenue Service. It pays to pay your tax.
It has indeed been exciting, very, very exciting, and we are proud of our youths. Surely with these ones, our dear country Nigeria is destined for greatness. How time flies! Because we have to move over for the next program, the debate will have to continue next week with the two remaining speakers, and of course, the results. Who won? Watch out for the answers on Tax Matters next week. And talking about greatness, talking about the young ones and the place that taxation is steadily taking in the scheme of things in Nigeria, one of the leading lights in the taxation subsector in Nigeria, Dr. Mrs. Titilayo Fowokon, has added yet another feather to her cap. On Saturday, the 7th of September 2019, Dr. Mrs. Fowokon was installed as the third chairperson of the Lagos State chapter of the Society of Women in Taxation, SWIT. The investiture was a grand event that was nevertheless educative, featuring an investiture lecture delivered by Mr. Albert Folonsho, yet another leading light in the taxation subsector in Nigeria. The immediate past chairperson of SWIT, Lagos chapter, is Mrs. Dana Rose Ajayi.
I became the chairperson in September 2014 after having served as the pioneer deputy chairperson from the inauguration of Lagos chapter in July 2010. I am very delighted to bring to your attention our chapter's largely successful activities within the last 53 months in spite of the tough challenges. Now you have your last assignment. I decorate you with this in the name of the Father, and of the Son, and of the Holy Spirit. And Mrs. Fowokon will now invite her ESCO members to administer their own oath. Thank you.
I, Cecilia Odibo, second vice chairperson, do solemnly affirm that I will be faithful and bear true allegiance to the Society of Women in Taxation, that as an executive of SWIT Lagos chapter.
In her acceptance speech, Dr. Mrs. Fowokon presented the roadmap for her tenure.
Working with my executive officers, we shall take necessary steps to deliver on the following 7-point agenda in no particular order for 2019 to 2021 executive year. Securing the realization of SWIT Lagos Secretariat, walking the talk through tax education and enlightenment for women entrepreneurs and business executives, intensifying membership drive and mobilization through value-adding and appetizing membership meetings and programs, touching the professional lives of tax women through business networking and members development, laying tax foundation for the young ones through tax promotion in schools via debate, quiz, and essay competitions, accountability and responsibility of the chapter leadership to members and national bodies, and giving back to the society through coordinated social responsibility, which I call CSR. This 7-point agenda, SWIT LAG, itemized above, is loaded with actions and activities that will drive its achievement, and I'm sure that when we knock at your doors, you will not hesitate to open it for us.
Tax Matters later spoke to Dr. Mrs. Fowokon on the 7-point agenda of her tenure.
What do we now expect from your new executive committee?
Well, for my new executive committee, I expect more cooperation, I expect more collaboration, I expect that we all work as a team to be able to do more. You see, once the person that was ahead of us has done a lot, so it's like giving us a big shoe to wear. So we should be able to work together as a team to be able to do more and achieve more, and together take the SWIT Lagos to another level.
So where do you see the Institute and SWIT in the near future?
I see the Institute and SWIT in the near future being decision makers when it comes to tax matters. I see us as a hub where government can look into and see policy makers that they can, of repute that they can draw from. I see SWITian and SWIT as a network of professionals that will turn around the tax environment of Nigeria and even globally. I see Nigeria as a trigger that will put tax compliance across the world and will have people that will stand for the cause of taxation anywhere they are.
From all of us at Tax Matters, big congratulations to Dr. Mrs. Fowokon. More ink to your pen. To you, our viewers, once again we say Happy Independence Anniversary. Keep watching Tax Matters. Remember, for information and education on taxation, Tax Matters is the program to watch. See you next week.